Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was scrolling through the comments section. Some people are talking about portfolios. How do you set up a portfolio? What are some suggestions on it? And I'm not going to claim that I'm the best portfolio setup person, but anything that you know a lot about and that you can hold on to, I would probably overweight those things. One area that people I think don't give enough weight to is real estate. Real estate can build a lot of wealth. You can get a loan for it. It's pretty easy to get a loan. And then you can also do things in terms of sweat equity to the house to improve its value. You can get renters. If you're living there and you're young, you could maybe rent out rooms and they can cover your mortgage or cover a lot of the costs of owning the house. With the market getting a lot tighter in terms of homes being sold and rent and all this stuff, I think it's very favorable for young individuals to have people live with you because I think that's probably what's going to happen. And you can make some money that way by them paying off your mortgage and increasing your equity into the house. Plus, you're exposed to the real estate market, which I think will be a strong real estate market. So that's one area. And I know a lot of people, they seem to not like real estate. I don't know why. I think it's probably one of the easiest ways to build equity over the long period of time, especially if it's favorable conditions for real estate. Another thing I want to talk about with portfolio and all these things, what I do, and this does not transfer over to other people, is I look at asymmetric bets. And asymmetric bets are bets that have smaller downside and massive upside potential. In order to do that type of investing, you're going to have to look at everything different than most other people. You're going to have to literally separate yourself from others, because most people, when they look at some of these charts or they look at the price of something, they have a normalcy bias or a bias that whatever that stock was doing is going to continue into the future, especially new investors that have that. What I'm doing is the exact opposite. I'm looking at charts that are squeezing up. They're very, very low in terms of prices, and the volume's starting to kick up. And when I see those types of setups, like I've seen all over the place in a bunch of different commodity type companies, you can buy these things for incredibly low valuations. We use the ratios to determine value here, so you can tell that oil is incredibly cheap, or uranium, or whatever you're looking at. You buy the company has all the traits of increasing volume. They've got they're contracting into a point, which means that the buyers are starting to equal the sellers, and you're going to get a big potential move out of it. And then I just hold on for a very long time. I don't trade in and out. And I know a lot of people, they want to trade in and out, but that's not how wealth is given, guys. That's not how wealth isn't made by trading. I just don't know that many people who personally, or even out, anywhere, where they are active traders holding for like a month or two that are incredibly wealthy. I just don't know any. I'm not saying you can't do it, but I think the likelihood is probably pretty low that you can do it. So I've adopted over the years of finding very good value, the name of the channel there, and holding on for the duration of a bull market, a big secular change. So I'm buying assets that are incredibly cheap and holding on to them. And when I view these assets, I may not view it like maybe some of you or some other people. Like I look at the asset like Deep Yellow or a Bannerman or some whatever it is. I look at it and I say, I am buying Bannerman at 19 cents a pound. That's what it was originally, of uranium. And I have a good management team that could probably make this thing work. And in a raging bull market of uranium, if I truly believe that, in the future, those pounds will be valued far higher. And management can add value to the shareholder by developing a producing mine out of it. And yeah, it's going to take some capex. Yeah, there's going to be some hurdles, but I'm viewing it like I am getting a piece of this company for 19 cents a pound that they've got. I mean, that's a ridiculous. I don't even know. I was so dumbfounded by the pricing of it that I asked Terry Papineau. I was like, "Is there anything wrong with this company? I mean, why is this so cheap? Like, what's going on here?" And I that's when you buy it. You buy it when nobody wants it. And I was like a contrarian within a contrarian move. And I've got Bannerman up here behind me. That's the chart there. Another thing I want to go over here, and we're talking about building wealth and investing and mindset and all this. You'll lose me here real quick. I'm just going to hit all. So this is exactly what I look for when I look for a good investment. You get a downtrend. I'll even kind of do this. You get this kind of downward move. You get this sideways move. And then the volume kicks in. See this volume all over here? All this volume over there. Let me get this out of the way. All that volume from 2017 and on, that just looked ridiculously good. You get the big candlesticks that are big up days and then the small down days like this. This is a screaming buy. Then that comes. That comes going up. That's exactly what I look for in a commodity company doing a bottoming pattern. And I look at these things and someone can ask themselves, like, why didn't I put all my money in this? Why didn't I put all my money in this one company or this one thing? Because it's too much risk to put all of your money in one thing, especially if you start generating a lot of wealth. I mean, I'm not going to put all my money in one company or maybe even only in a handful. And maybe it'll work out for you guys. Maybe that's the case. But what if it doesn't work out? Now, I look at this from a kind of a betting strategy look at it. You've got downside risk, you have upside potential. These are massive risk rewards that we'll probably never see in our lives again. And I'm not joking. They're massive risk, very huge rewards, very low risk. I can risk 100% of my money, but I could make 100x buying at a complete bottom of one of these. It's very possible. You get it, because I got this one at 2 cents. But I mean, if somebody got it at a penny or something like that, and this goes to $10, it's a 100 bagger. It's possible. I don't know if it's going to happen, but we'll see. Do you need to put all your money in there to get 100 for a 100 bagger? Do you need to put it all in there? I mean, yes, it would be awesome. I get it. But you are risking a lot. And the way that I would rather play it, and the reason I like uranium so much, and some of these other energy companies like oil and natural gas and all that, they're highly leveraged. They have a lot of, it's a large asymmetric bet, very large. And it could be larger than what I even think, because if you look at the electricity prices over in Germany, you go look at your electricity prices in some of these other European countries, they're going through the roof, and they could easily put in uranium. And I know some of them are actually taking it out. I think Germany's taking all their nuclear out, but you know what? That's their risk, whatever. Totally disagree with that. But when you look at these things and you have so few companies in the sector, what you can do is you can structure a portfolio that captures a lot of them. And I know people, oh, you don't want to have 20 companies in your portfolio of just uranium. Well, that's what I do. I probably have more than that. All it takes is for a couple of these to hit it big, and your portfolio gets completely changed. You don't need a lot of money in it. I mean, you can put a lot if you want, but you don't need to ante up everything. You don't need to go on leverage. You don't want to do any of those things. You do not want margin going on leverage. The companies themselves are leveraged. You know, they're high cost. Some of these are high cost producers, very small market caps. That has all the leverage you need in terms of price movement. You don't need to be going and borrowing money and buying these things because they're so volatile that, you know, if you buy it at the wrong time and it goes way down on you, you're going to get a margin call. You don't want that. And some of them you can't because they're OTC and they're small companies. But The way that I look at it as a betting strategy. If some of these have the potential to go up massively, 10 to 100 times, somewhere in that range, I don't know what it is. And let's say they're small exploration companies, they can find something during this bull market. I spread it across all of them. And all I need is a couple, one or two or three to hit. And if they have that large of a return, they find a really good deposit, then you win. You change your whole portfolio just having that money spread out. And it could be whatever amount. I don't have that amount, but if you're going after the Athabasca region with the explorers, I just put a little bit in each. Doesn't mean that this strategy is good or bad. The way I view it, if I get a 10 bagger, that means one company covers the entire amount of how I diversified across 10 companies. If one of them gets a 50 bagger, I make a whole bunch of money even on my entire amount that I put in there. So that's the viewpoint that I look at it. In last bull market, I think they all basically went up. So the downside risk, I think, is it's a good bet to take because if money comes funneling into uranium, there's not many places it can go. So it just goes into these companies, and eventually it'll pick up all the explorers as well. I think people will be going if this is as big of a bull market as I think it will be. And I do think it's important to get some wealth in real estate because historically that's a good spot to be. And a lot of people almost discount it. It's like they just want to make all their money on stocks or crypto or whatever it is. But that's what I look for in Bannerman. We can look at another one here too, like Deep Yellow. Now let's choose a different one. Forces Metals. Get this. Come on. Huh. So it's got the move down, sideways, and then you can see the volume all kicking up, and then we're moving back up. We're in a consolidation period right now, moving sideways. And what I do, and if you notice this, notice how few months Forces is up. Big up days, small little down days. Big up days, small down days. And then it just rocket ships higher. Timing these companies is very difficult because the moves can be so large so quick. And then they go into these consolidation periods. So I'll use Bannerman. I'm going to go to a 1 year. I'm going to back out a little bit. All right. I was buying back in 2020 in here. That's where I was buying a lot. Why did I buy it? Because it was contracting down. Notice how fast this went up. It just rocketed higher. And then this is about November to, it's about 2.5 months, this move higher. And then it consolidated. Well, no, it's about 2 months. 2 months up, consolidated for 6 months. That's a 6 months consolidation. And then another 6 months consolidation. This is about a year, a little less than a year. It's a little less than a year, about 8 months, maybe. 8, 9 months. And it consolidated sideways, and then we get this another large move that was a impulse move in August of 21, and then consolidated again. We're getting a little bit of a pullback. We pull back to about the peak here. What I want to make sure you guys understand is that the moves are short and fast. The consolidations are somewhat long. The moves are so big that if you bought this at 2 cents and it's at 21 cents, you're at a 10 bagger. And coming through this, you're almost in it or you're out. It's very hard to time all this stuff perfectly. And what I do is I just sit in it and let it go. And I add into the bottom here, the bottom here, the bottom over here is where I'm adding. I'm sprinkling money in here. Why? We got a downtrend break. It's starting to come on up. We got some positive things. Now this could break back down and maybe we can get a little bit lower. And that's okay. That's okay. I'll keep adding in. But the moves are so fast and quick It's going to leave people out of the stock if you're not paying attention. I'm not saying that you have to pay attention 24/7. I'm saying get in, hold on, ride the bull market higher. It's too hard to time this stuff. So building wealth, in my opinion, it's not about trading in and out and paying a bunch of taxes and being all stressed out. It's about staying in these companies and riding them higher. And for some people, that can be difficult. And you're going to have to change yourself to do it, I think, if at least this approach. I don't know of other approaches that work very well. And your portfolio, how much should I allocate to a certain thing? It highly depends on who you are and what you can ride and what you like, what you want to be able to hold on to. If you know you can hold on to uranium stocks, then do that. Or you can diversify out. I'm diversified. I have physical metals. I have real estate. I have equities. I have mutual funds. I've got all these different things. And yes, I have a good chunk in energy, in oil, natural gas, and uranium. Why? Because they were cheap when I bought them. They were super cheap. I think that the energy problem going forward could manifest itself in a way that puts fossil fuel companies massively higher. Like they're going to price fossil fuels through the roof. Maybe on purpose. I don't know. Maybe that's why they want to get rid of them. Is they say, oh, we'll just price them so expensive that we'll find alternatives or efficiency measures or whatever. But the setup here in oil, I think, is incredible. Same with the uranium. Oil, no one's been investing in it. They've got this huge shortfall in investments. And then we're going to hit, I think, max capacity of pumping capacity, and then I don't know where price goes. It's going to go very high. So when I was looking at a lot of those companies, this is just from building wealth. I don't sit here and trade in and out. I'll back out. We were way down here on a pattern that's massive up here. So here's your pattern. You're 1, 2, 3. It broke to the downside, and they literally gave you free shares down here, in my opinion. I just think it's ridiculous how cheap this got. And here we are coming back up. Basically, we've broken the pattern, the downward pattern. We're probably going to move on up at some point. And if I were to look at this, I mean, it's probably going to be something like this. I'm just playing around here, guys. This isn't. And I know it broke down, but I mean, it's possible that this could get to $110 or something like that. Maybe we'll see. I mean, this one here, the projected move 61. I'm going to say it's somewhere in the middle there, is my guess. And then that doesn't mean that it just stops when it hits there. It could continue to go higher. But this was a huge opportunity down here, and I've just been holding on. And some people say, how do you hold on to something where you're up, 20 times your money or so? I just continue to hold. There's no reason for me to sell. What else am I going to buy? There's nothing else out there that I want to own more than SM Energy and some of these companies. I'm up, some 10x on some uranium companies and whatnot, and I think that there's so much more upside in it that I'm going to hold on. And building wealth, you're going to have to know the valuations. You have to know how to value assets if you want to build wealth, because that's how you make money. You make it on the purchase. And you can make it on the sale too, but you make it on the purchase because you're buying these things so cheap. And then eventually the market will realize that they are that cheap and money will flow into it. And they'll change those valuations. So the way that I look at this, 30% physical metals is what I own, roughly. Maybe it's 20% now. It's hard to tell because the other portfolio grew so much. Real estate's like 30%, 33% or whatever, and then equities is the rest. And I mean that's kind of how I'm building it. And I'm not going to give you guys 10% this, 20% that. That doesn't work. I don't worry about that. I worry about where I think the best opportunities are in the market, and that's where my money goes. and then I spread out amongst the best because I don't know exactly what's going to happen in the future. Those opportunities, in my opinion, platinum's the cheapest it's ever been. It's a very good inflationary mix. I like platinum. And I play it with the physical metals. I also play silver with physical metals. Silver is the number 2 commodity. It's used everywhere. It's a monetary metal. If something monetary happens, I got silver. And I've got some gold. If more than likely the problems will stem from energy. So I have a lot of energy investments. Uranium, natural gas, and oil. I don't really mess with too much of anything else. I have some mining companies. I have royalty companies in precious metals. Why do I have that? It takes out the energy costs. So now I'm just playing volume and price. And if we have something that's monetary problem, which these are all driven by inflation and monetary type movements, I have exposure to it. And that's what I want. And then I think copper. Copper's a play where if we have an energy crisis and we have to go to renewables or something different, they have to cross over certain commodities to do it. Copper's one of them, nickel, some of those type in tin, I think is a good play. Those are all good. So I'm basically playing this from an energy perspective and from a monetary perspective. That's my entire almost equity side of the portfolio. I do have some other stuff like healthcare and other things, but there's a lot that I own in that. And that my viewpoint of my portfolio is focused kind of from that perspective. So I'll end it there. Thanks guys for listening. Give me a thumbs up. Let me know if you guys need any help. Put it in the comment section on how to construct a portfolio. I'm probably not the best to do it. I just go with what I think are the best opportunities in the market. And I mainly buy royalty companies or some of these energy companies and a couple miners that I really like that I think might have the leverage if that price moves. Because the asymmetric bet is so big that I'll take it, like Discovery Silver or something like that. All right. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.